What's up, guys? It's Mark here at DynoTrading coming at you with today's recap on the market. We're going to take a look at some really nice signals and setups today. So let's get right into it. What you're seeing on the screen right now is today's price action on the S&P 500. I've also got the NAS 100 queued up here for you guys. We're going to take a look at both of them. And don't forget, folks, all right, never forget this. You can trade the S&P 500 and the NAS on Forex. You can do it on futures, and you can do it on stocks. That's the beauty about trading the indices. They are very liquid. You typically get very good fills if you're trading peak hours. And of course, in case it wasn't obvious, the trends, as you can see right here, on both the S&P 500 and the NAS are extraordinary on all asset classes. Remember, Forex, futures, and stocks. Now look, I continue to believe in the power of a retracement. I continue to believe that a retracement setup has a better risk profile than a simple color change profile. What do I mean by that? Well, you can see right here, all right? At 8:40 a.m., this vol indicator turned red, right? In fact, let me go ahead and outline that for you. It happened right on this bar. But this right here is not a retracement setup. This is more of a momentum setup. You follow? And look, there's nothing wrong with the momentum setup. I'm just telling you what I personally like and what I like to see on the charts, right? So if you ask me, I like this one a little bit better, right? Because this pattern right here meets my definition and my risk profile of a retracement. I want to get that better fill. I want to let the market come back to me before I take a short. And here's the retracement pattern for those of you guys that still don't know what the retracement pattern looks like. It's real simple. Leg 1, leg 2, leg 3. That's it. That's the retracement pattern. All right? Nothing complicated about it. Nothing that's going to make you get a degree in applied mathematics to figure out this pattern. It's just 1, 2, 3. All right? So essentially, we want to wait for the market to establish the direction. That's number one. We then want to wait for the market to retrace, aka give us that pullback, give us that better fill, and then we're hoping that the market takes an absolute dump. And for me, this was almost a perfect setup today on the S&P 500. But we're not done, right? Let me draw your attention. I think for those of you guys that already knew, for those of you guys that were trading today, you know that there was another retracement setup right over here. Right? Market comes up, establishing leg 1 of the direction. Market pulls back a little bit, giving us the retracement, and then kablam! We need a bar color match. Let me put a couple more arrows there in case it's not visible. Let me zoom in as well. We need a setup like this where the retracement happens, but it also happens on a bar color match, right? The color of the bar has to match the color of the volume indicator. That's all we're looking for. We're looking for confluence. Multiple factors have to line up in our favor. That's how you qualify a trade, ladies and gentlemen, right? And you can see this thing just rips for, what is this, about 50 handles on the S&P from the starting point to the intraday equity high, right? That's about 200 ticks or pips if you follow along in Forex. It's not a small amount, right? 200 ticks is quite a lot. Same setup on the NAS, folks. Let me zoom in on the NAS here for you, right? You can quite clearly see, hold on, let me draw the signal. You can quite clearly see the vol turns green, right? Let me position this here for you guys. Vol turns green. And why don't you see if you can spot the retracement, right? Look at this nice retracement right over here. Tell me that's not the most beautiful thing you've ever seen. Right? Again, retracement. Leg 1, leg 2, leg 3. We're done. We're done looking for setups. We're done looking for the pattern. That's the pattern. Okay? 1, 2, 3. Folks, this seems to be happening on a daily basis. I know all of you active traders are spotting these patterns. You're getting better at pattern recognition. It's a phenomenal skill to teach yourself. Last thing I'm going to show you, let me go ahead and fit this back to scale here. All right, last thing I'm going to show you here is I'm going to timestamp the market open, and I'm also going to timestamp lunchtime. All right, so everything you see in between these two blue vertical lines is what I consider to be the morning session, and what's also, in my opinion, I consider this to be peak trading hours. Most amount of volume happens in the morning session, in my humble opinion, and I do not bother wasting my time after lunch. Here's why. Here's a perfect example of why. Look what happens after lunch, right? Market just completely chops around, goes nowhere, right? There's no clear trend, there's no clear patterns, there's no even retracements to be had here. You follow? Whereas during peak times, the charts look absolutely gorgeous. Guys, that'll do it for this video. If you'd like to get your hands on this powerful volume indicator, then get in touch, call, text, email, whatever's convenient, and I'd be happy to hook you up with a free one-on-one demo, really show you how this volume indicator is going to supercharge your trading. Guys, thanks for watching this video, and I'll see you on the next trade.